Well, we've had good news. Inflation has come down. It's come down as we expected. But we have still got some way to go, particularly with what I call the more persistent bits of inflation. That's particularly the services element. It's about half the total basket of prices. That's still at 6%. Now, we don't need to see it come all the way down to a sort of sustainable level, consistent with the target, but we do need to see further progress. But I do want to give this message very strongly. We've had very encouraging and good news. So I think, we can say we're on the way.
But not quite yet in terms
not quite
of...
yet, because so we've got to see more evidence that this is sustained, and particularly it's sustained across the, across the whole sort of, in a sense, mix of things that form the inflation basket. But it is good news.
And you said that we don't need to have it come all the way. It's probably worth just clarifying what you mean by that. You mean the services element don't have to cut?
Well, we don't have to actually get inflation all the way back to target sustainably to cut rates, for instance, because what we have to do is be convinced that it is going to go there. We should act ahead of time in that sense because we have to be forward-looking.
Are you still convinced one of the reasons for caution that you've expressed before is that inflation will go below target partly because of the energy cap, but then it will sort of bump back up again over the summer? Now, the OBR don't predict that. Do you still stand by that forecast?
Well, that's the forecast we made at the beginning of February. We'll make another one beginning of May. We did have that view back in February because we are going to see quite a drop in inflation because when the next Ofgem price setting takes effect. So that will be the April number that comes out in May. Now we did think back in February, yes, but that will come off as these sort of annual effects work out. We'll take another view on that in May.
Markets pricing in 2 or 3 cuts this year. Is that what people in home should expect?
Well, I'm not going to endorse the market curve, but I think it's reasonable that markets are taking that view given the way inflation has performed. But that's not a prediction from me as to what's going to happen, either on timing or amount. But I am encouraged.
Prime Minister has been talking about a turnaround in the economy, a bounce back, even engaging with the concept of green shoots of recovery. Is that where you see things?
Well, I think that the pretty small technical recession that we appear to have seen at the end of the second half of last year now appears to be going away. I think we've got a pretty consistent set of indicators coming out on activity of the economy to suggest it's picking up. But obviously there's a lot that we want and need to see in place. But I think there are reasons to believe that we are now seeing an end to that smallish technical recession that we saw last year.
There's a lot of pressure still that people are feeling, particularly on things like mortgage costs and borrowing costs. They see us as right now still in recession. They see it coming down to target, and they're wondering if you're going to cut in 2 or 3 months' time, why not just cut now?
Because we need to see consistent progress towards hitting the target. We've had good signs. I'm encouraged, but we do need to see that consistently on the way to the target. And I'm hopeful that's what we'll see. I'm very hopeful actually at the moment.
It's quite interesting looking at the mortgage markets. Because you see the rates came down sharply in January, they went up again, and then some of them are coming down again. They're sort of anticipating what the bank will do, and it's leading to a bit of uncertainty in the mortgage market.
Well, I think you're right. The rates came down, sort of tail end of last year, early part of this year, as markets, I think, adjusted to the fact that around the world, actually, it's not just in this country, the path of rates was lower. They do move around a bit. Mortgages are now set off market rates because we have predominantly fixed rate mortgages in this country. So they're set for 2 years, 5 years, and they're priced off market rates, not directly off our official rate. So they will move around a bit with markets.